Good morning. It's November the 21st, 2017, and 2 days before Thanksgiving. We'll start with our disclaimer. Hypothetical assimilated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have been overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the factor designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Well, we're counting down into Thanksgiving. That usually favors a rally in the stock market. Treasuries tend to move sideways, affected by fundamentals. So strength in the stock market can take us lower, but I don't believe treasuries will break. The projected interest rate increase in December is probably already priced in. And now the yield curve is flattening, and as people wait for the next move after the December interest rate hike and input from the economy. So right now everything looks lower. We should get a test of the 16 to 20 area down here. We'll make that buy 1, and then buy 2 will be 9 to 13. The sell side, 23 to 27, like to get it done as close to 28 as I can, but that's where we are right now. We have a mom right here, and you can see that volume is down at 17.5. This is our tractor. So that's the pull if we can get down there, and we'll see if that actually happens. 31 to 03 for sell 2. Our news today: Chicago Fed's National Activity Index up 0.2. No one will pay any attention to that. Existing home sales 5.44. That's our only piece of hard news today, so it probably will be paid attention to. That number could come in higher than forecast. Direction of the Emini, I think, is probably the biggest factor that we'll face today. And while bonds may not break, I think a rally in the stock market will put a lid on the upside potential in treasuries. 23 is very, very aggressive. 27 to 31 is where I'd like to get it done, but may not get up there. Okay, 4 to 8, number 1. Sell 11 to 15, sell 1. 19 to 23, sell 2. On the buy side, 24, 28, number 1. 17 to 21, buy 1. 9 to 13, buy 2. Looking at gold, we last night we had hoped to sell the 78 to 80 area. The high was 81, so the overnight research worked out well. I'll do a T-split here. Trying to trade lower. Not too sure that they can break it today. So we'll make stops below 75 to play. 73, 75, buy 1. 69, 71, buy 2. On the sell side, 78 to 80, sell 1. 83, 85, sell 2. The euro, I believe, was a little lower this morning when I looked. Was not much. Here's a T-split here. Put all this together, you're definitely dealing with a B with a move out of the middle, and you can see that volume is below time. Now we'll talk about that a little bit today. During the day session, the skewing of volume to time is very, very important. When the day comes to an end, tend to forget about it. But again, it shows you that people are willing to sell the bid to make sure they get off a short rather than sell the offer. And it only takes one tick. So right now, 1750 to 60, sell 1. 75 to 85, sell 2. On the buy side, 1725, buy 1. And 117 even, buy 2. Looks like we're headed lower, so buying against the buck, I think, is the play. Okay, the OPEC meeting is November the 30th. Explanations being given for the strength in crude as rolling over the current production agreement, maybe through the second quarter of next year, and I think that's what it will be. Got a seller where we thought we might have it last night. We had a 650 to 75. We got up to 80, so we'll make it 75 to the buck. 57 and a quarter, 57.50, sell 2. On the buy side, stops below 56, so 55.75, 56, buy 1. And 55 and a quarter, 55.50, buy 2. And we'll see if we can get that selling. Might take a 56 and a quarter to get off the long, but for right now we'll play for lower. Okay, the tendency for the Emini is to rally into Thanksgiving and make new highs for whatever the current range is. So we'll play for that. Again, I don't have a lot of interest in the short side of the market. It can happen and does infrequently. But you can see everything is pointed up. 90 to 95, 94.50 is where resistance is right now. So I think we're going to trade higher. So we'll make 94, 96, sell 1. 99 to 02, sell 2. And we'll put a question mark at 90. That is resistance right now. On the buy side, 85 to 87. They make us pay up early in the morning. Buy 1. 80 to 82, buy 2. Chicago National Activity Index up 0.2. 5.44 million existing home sales. That number could come in higher than forecast. The rally in Asia, the only commentary I saw was follow through from buying in the U.S. The rally in Europe, Goldman Sachs came out and made utilities, automobiles, and I forget what the other one was, on their buy recommendations. And so again, it's just follow through buying off of the strength in yesterday's U.S. market when you get right down to it. We are the dog, and the rest of the markets around the world are the tail. If a market turn is going to happen, it'll happen in Europe. It almost never happens in Asia. So I like the long side of the market. It's going to be like yesterday. Just find a place to buy it. Hang on. Can't take out 94.50. We can consider a short. It's going to take a bit to get everything up and posted. Going to get busy on that. Back with you as soon as possible.